You know, once accounting means it, you controls oil, control the world. And every time we forget it, the oil mafia of the world remind us by choking the global economy and by throwing nations into chaos.
The energy world is completely turned upside down by Russia's invasion of Ukraine.
Russia says it's cutting oil production in retaliation to a price cap.
И вообще не будем ничего поставлять, если это противоречит нашим.
Of course, the supply crunch translates into higher oil prices, and that's something with broad economic impact.
War between Israel and Hamas has ignited new fears of wider consequences in the Middle East.
Oil-producing nations have weaponized energy to dominate the world whenever they want.
The Organization of Petroleum Exporting Countries
imposed its boycott and within a year raised prices more than 300%.
Electricity bills are soaring.
We're at a moment in history now where energy has become a weapon.
Because they're basically showing that they hold the cards, or more precisely, they hold the oil here.
Russia has dethroned Saudi Arabia as among the biggest suppliers. So that is how significant Russia has become.
The higher the price of oil, the more power Russia has over Europe.
And today the world is watching that reality unfold once again, because when a single chokepoint can disrupt oil supply, it doesn't just trigger an energy crisis. As shakes stock markets, disrupt global trade, fuels inflation, it pushes entire economies toward chaos. So before the world feels the full impact, let's understand what's really happening inside the global oil market. When the war in Iran kicked off, Iran reacted by essentially closing the Strait of Hormuz. Energy market analysts warned that if the strait wasn't reopened in short order, oil prices would go to the moon. At normal times, something like 20 million barrels of oil passes throughout the strait every day. Roughly 20% of the 100 million or so barrels that world consumes each day. And there is not really an alternative route available because, well, the strait is the only way out of the Persian Gulf. Market analysts noted that 20 million barrels a day is roughly how much global oil consumption fell by during the height of the pandemic, implying that for the global economy to adapt at the prolonged closure of the strait, we would need to see a pandemic-level slowdown in economic activity, and that prices would keep rising until this happened. 2 months on, however, Iran and US look no closer to death, and the Strait of Hormuz is still closed. But despite this apparently unprecedented dislocation in the oil market, which the IEA chief described as more serious that once in 1973, 1979, in 2022 put together, prices have basically hovered around the $100 mark, a fair bit higher than they were before the war. Sure, but nowhere near as high as most people thought that we would go, and definitely not unprecedented. Oil hit similar high in the aftermath of Putin invasion of Ukraine, for instance, and traded around the $100 mark of most of the early 2010. In fact, an inflation-adjusted basis, in other words, adjusting for the fact that dollar is worth less today than it was back